In this video, I'm going to go over the recent crypto market drivers that happened in the first half of 2024 and rate this news as most impactful to least impactful. And they can be both bearish and bullish news. And keep in mind, this is purely for entertainment. I am not giving any financial advice, so please do not base your investment decisions on this. So let's start with the better tech. Yeah, there has been a lot of development in the sphere, and we see that a lot of the scalability issues addressed and a lot of the interoperability issues at least trying to be addressed. And I see also a lot of new technologies coming. The merge of AI in crypto is also pretty interesting, although still needs quite a bit of development. So although I'm personally quite excited about this, I would say it's not as impactful for like the general crypto market movement per se, because people do not pay attention to the tech that much. People just like loud words. So I would put it in the B tier. ETH ETF has been approved, and just like Bitcoin ETF, and I probably should have included it here, I think it's a very impactful event, but only in a long term. So right now we are probably not seeing it to the fullest extent. However, it has a very good potential to be to play an important role in the future. So for this, I would place the approval of the ETH ETF and Bitcoin ETF in the S tier. The next one I have on the list is lower team funding. So because we've seen like lower capital inflows and like the slowdown of investment in the first half of 2024 and like in 2023 as well, this also means that the crypto salaries are kind of less attractive, because in 2021 and 2022 there were like all these big pieces of news of how much blockchain devs are making. Of course, it's still quite high, but currently there might be like a speculation that because the investment is lower and a lot of the token allocations that were to teams are kind of losing in value because we are in a sideways market. We used to be, at least. We'll see how it changes in the next couple of months. The team funding was also pretty low. At the same time, I don't think it's very impactful at all, so we can like just put it in a D tier. It's important to mention, but it's not a big deal, to be honest. So TradFi institutions coming. That's interesting. So the overall kind of aura of institutional adoption. Let's think of it kind of how it may happen. So we can either have big TradFi institutions coming, adopting, creating ETFs and all of that, or we can have the crypto native institutions growing bigger and bigger. So like Binance, Coinbase, and all this kind of the intersection of CeFi and DeFi institutions growing bigger. So overall, the merge of the TradFi and DeFi, I think it's pretty impactful. And although I wouldn't put it in the S tier. In my opinion, it goes in the A tier. The next driver, which is trading volumes, is moderately bearish, I would say. So the lower trading volumes means that the market has been sideways, bearish, so to say. And that also means that for the market makers, it is not the best time to trade and make money as well. So they kind of participate less, plus it's also the summer right now, which is not historically the best time for seeing the best crypto activity out there. However, it's not like really impactful, so I would put it in the C tier. The next one on the list, I have lower profit from engagement, and by that I mean that right now we have a kind of a poorly executed airdrops, and we had a series of them. So in the past, we had this like huge airdrops, which were very good for the market and for the people. So they brought the sentiment up, they gave people money, and usually when people get money from crypto and airdrops in general, they go ahead and invest that money into crypto again, because like to make even more money, right? So right now, because the profits have not been the best from airdrops and people still spend time on different ambassador programs, they still spend time on gas and everything, this is quite discouraging and lowers the sentiment when they did not receive the rewards they were expecting. So this is a kind of a negative bearish driver. However, at the same time, the airdrops still happen and several big projects went out, like ZK Sync and who was there? Stark we also had, Layer 0. So they all went out. So we still had some, which was kind of bullish, but they were not the best, which was kind of bearish, pretty bearish, so that we didn't have much of the capital inflow back into crypto. The overall impact of this, I would put it between a B and a C tier, but let's do with a C tier for now. The next driver on the list is kind of bearish at the moment, but it has a very great potential for improvement in the future. And overall, I think this is kind of a significant factor, so we put it in the A tier. So lower capital inflows are coming both from decreased VC funding during this time. It also comes from lower retail investors engagement, but with the ETFs we may have some movement that is more significant, although we haven't, at least in my opinion, yet seen the full power of ETFs, and it's still to come. So this has a very great potential to be a good driver, especially driver up, but at the moment this is kind of slightly bearish, at least it used to be in the first half of 2024. Let's go to the next one. So infra and dApps imbalance. In like the previous bull cycle, what we had very few L1s, very little infrastructure, and we had many dApps emerging. So like there was, let's say, Polkadot, there was Cosmos, and there were people building on top of Polkadot and Cosmos. And nowadays, people, instead of building on top of Polkadot and Cosmos, they build things alike Polkadot and Cosmos. And this is kind of creating an imbalance that we have so much infrastructure right now. There are so many L2s, there are so many L1s, there are so many things that you can build on top of that nobody has time to build things on top of them. So in the end, we have kind of lacking ecosystems because there are just so many places to build it on. So even though it's kind of an important factor that crypto does not have enough utility in terms of dApp usage, people do not really pay attention to this. And historically, infrastructure attracts the most funding and people like to invest into more fundamental projects. So no wonder we see the rise of more infrastructure type projects. But overall, it's not truly impactful in my opinion. So we can put it in the C tier. The next one on the list I'm particularly excited about, and it goes into S tier straight up. This is the positive macro environment. Although I cannot say it has been always good in 2024, it's becoming better and better. And we've seen better inflation numbers that is stabilizing, and therefore people and investors are pricing in that the interest rates are going to go down and maybe lower in around September. Of course, it's not guaranteed, but if people think this way, they're already pricing it in. And lower interest rates usually mean more money available for investors to invest into things. And if there is more money, people are more willing to spend it to kind of a lower cap, less fundamental things. So this is a very impactful, in my opinion, factor, and it's particularly good for altcoins. So let's see what's the next one. Bitcoin halving. Yeah, I could not put it here. And of course, Binance report also mentioned this one. And yes, I already said, but just saying again that I'm basing most of these pieces of news on the Binance report. And we put it straight into the S tier because this is like although you don't see it, the impact of it in the first several months maybe, because a lot of it has been priced in advance. This is usually, and this has been historically, the landmark of the start of the bull market. So we cannot just put it into anything else other than the S tier. Dev activity growth, which is kind of an interesting factor that despite the expected lower team salaries and lower team token allocations because of the price of the tokens, there is still some dev activity growth, which shows that this first of all depends on the project and on the sector. Second of all, it also very largely depends on the project size, and also it doesn't mean that the quality of the developers is growing the same way. And overall, it's not truly impactful. It's just like an interesting, good, positive sign in my opinion, but it wouldn't like let people see like, oh, look at that, there are so many developers, let me invest in crypto. It doesn't usually happen. So it's interesting to note, but it's not really impactful, so we put it straight into D tier. The next one on the list is the US presidential election, and it goes into the S tier. All the news on Twitter, like, I have not seen much other than people talking about the elections, Trump coming to the Bitcoin conference, and overall, the Trump election, especially after the assassination attempt, has been kind of more and more bullish for the crypto market. Although now, if you look into poly markets, Kamala Harris is also gaining momentum. But overall, people are like excited in a way for Trump coming to the US presidential throne, so to say. But overall, if Trump wins, which seems to be the case for now, based on poly market, people are very bullish on crypto because of that. The next driver I accidentally put twice into this list of drivers, so we can actually replace our lower capital inflow with lower liquidity and lower capital inflow, because the two are related and it's better to have them as a single driver. A slightly bearish driver when it's low, and it has been low in the first half of 2024. I will just remove the capital inflow, please ignore that one. So altcoin performance, especially if you look at Solana, you see like the altcoin season has almost started and it's been doing very, very well. And this is counteracted by many altcoins going down or moving sideways. So the overall impact of this is kind of, because it's mixed, the overall impact is not the highest. If we've seen more altcoins being bullish, we of course would put it higher. But because the results in this aspect are mixed, we put it in the B tier. The next driver on the list is bearish again, I'm sorry. But this is the problem of low float, high fully diluted valuation tokens. And we put it in the B tier, and let me explain why. There has been a trend that tokens started launching with huge valuations and very low circulating token supply. This means that because of this scarcity of the tokens and high valuation, people buy more of these tokens and they compete for these tokens because there are so few of them, and this therefore inflates their price more than it's supposed to, because people are not pricing in the fact that there are going to be many more tokens in input in the future. So if you look deep into it, it's a very deep structural issue, and the tokenomics need to be adjusted, or the valuations of crypto projects need to become more sensible. And this is very closely connected to the token unlocks that are coming for these projects in 2024 and to 2030. So there is 155 billion token unlocks that Binance report estimates that are coming. So this basically means that the projects that are launched at this low circulating supply are going to face a selling pressure, because people don't want the value of their tokens to be diluted in the future with further token emissions, so they will be forced to sell them, and this is going to drive the value of these projects down. At least that's kind of the theory, unless they can somehow sustain this. The next one on the list I would like to discuss is the big sales of Bitcoin. And Mt. Gox is paying off the creditors, and also there was a sell-off by the German government. We also see some news about the US government moving its Bitcoin out or here and there. So this is putting out a very negative sentiment to people as well as the selling of those tokens, and Bitcoin is pretty significant for the market, but Bitcoin's market cap is so huge, a lot of that can be absorbed. So in the short term, it is bearish, but I think it is still sustainable. So I would put it in the B tier. The last but not the least one on the list, I have the months of sideways market and bearish kind of sentiment that people have. I'm going to put this in the C tier. And by this I mean that there is no inertia happening. So when everything is going down, there is some kind of, how do you say, a snowball effect happening. When people see people selling, people see prices going down, they tend to sell themselves because of psychological factors and fear factors that everything is going to explode. When there is an upwards movement, there is a similar thing in return. When people see that crypto is going up, people are going to buy more just because of the FOMO and everything. So as much as people know that you should never buy high and sell low, people still buy high and sell low because that's the only way this kind of thing is happening. So anyways, just the whole fact that months of sideways market have been out there, it means that that the market has no inertia for the upwards movement. And once we start moving, it's going to be more impactful. Our tier list is finished. And looking at it, I would honestly just change the better tech and put it into the A tier. This better tech can allow for further companies and for further real-life adoption and maybe integration of actual payments of crypto and something that we can use and touch, which I think it's very important for the growth of crypto and maturation of the field. My conclusion from this is it's like a TLDR if you do want to watch this whole thing. The overall sentiment is kind of bullish. You should be cautious as well, but the recent market events and recent movements of all crypto stuff has been doing pretty well. In my opinion, Bitcoin hit on 69K. We've seen big sales, yes, but they've been pretty well absorbed. There are also many long-term factors that are impactful, such as the approval of ETFs. And yes, there are some structural issues with the low float and high fully diluted valuation tokens, which are important, but, well, people don't care about them that much, and they, I think, do not base their investment decisions much because of that on the overall crypto. They might base their decisions off those particular projects and they may avoid those, but it does not mean that they are not going to invest into other projects. I hope you found this slightly entertaining or maybe even useful. So either way, thank you very much for watching and see you in the next one.